Hey everybody, good to be back with you. My name is Mike Fairbourn here for gettoknowschwab.com. I'm sitting in for Brent Morris, a good friend of mine. Looking forward to our discussion today. And folks, a lot of things I wanted to review in terms of the stock screener itself on Schwab. Maybe some ways to kind of extend that, get a little bit more out of it. Really wanted today to just kind of show you the three key ways that we can build around investing styles: growth, value, and income. So ways to screen for those kind of stocks. And then at the end, I want to just kind of try to combine all three of those together and just see what that screener can do for us, what kind of stocks it can provide us. So a lot of great details there. I look forward to it very much. And welcome to you. We've got TM. Good evening to you, sir, as well as Scott, Ganesh, and Mike Evans. We do have Kevin Horner in the chat. Thank you, Kevin, for stepping in today. Just sent me, we just had an interesting discussion before I got on here. Still thinking about that. Work-related, folks. No worries here. Let's go ahead and dive in, though, to our disclosures and get the show on the road. All right, first off, TD Ameritrade is a member of FINRA, SIPC, and the TD Ameritrade Media Productions Company are separate but affiliated subsidiaries of TD Ameritrade. At the end of this, wanted to state that TD Ameritrade Holding Corporation is a wholly owned subsidiary of Charles Schwab Corporation. Now, Charles Schwab trading services include access to street smart trading platforms and the Schwab trading specialists. The information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Some additional points listed here. Schwab equity ratings and the general buy and hold sell guidance are not personal recommendations for any particular investor or client and do not take into account the financial investment or other objectives or needs of and may not be suitable for any particular investor or client. With that, folks, that is our only disclosure today. I wanted to go ahead and just take you right into the Schwab account, just right at schwab.com. And where we're going to start now is at the top here under research. We're going to click on research. And as I click on that, you're going to see there's going to be some information that does pop up. And I can take a look at other areas within this group. But one of these main columns here under research tools, well, we do have stocks and other selections to look at. I'm just going to go ahead and click on research tools for now and take you to an interesting area that has more than just the stock screener, which we are headed to today. We've got the Schwab stock list. There are ways to compare stock. There is a preferred screener, as it states there. There are rating changes as well. So view recent rating changes. So there's just some really cool buttons right from the get-go that you can click on to take you to these interesting areas. Now, we are going to focus in on the stock screener and take it from there. So diving into the stock screener, you'll see that I do have already some data saved here in terms of a search. You can save searches. There are predefined screens up top, and my saved searches, you can see that right there. Now, this isn't actually a Dividend Aristocrat search that does look for Dividend Aristocrat stocks that have paid dividends, increased dividends for the last 25 years consecutively, although it kind of tries to find that here on schwab.com. Okay, so what I want to do is kind of highlight, first of all, a few of the preferred screens, predefined screens listed down here. And then what we'll do is we'll build growth, value, and income type screens and show you really kind of the capabilities that schwab.com does have. So down here, as you can see, we've got top analyst ratings, near price highs, growth at a reasonable price. This combines a couple of different aspects, doesn't it? So of the three key investing styles, growth, value, and income, this does include, well, it includes growth and value. We can combine two of those together, growth and value. Some others in here, you can see that it's price low, so that might be a value type of trade. Small cap growth, you got value again, small and mid cap value, and finally, dividend growth, which really kind of ties into the income approach of investing. So you've got growth, value, and income already predefined here. I think these are useful and helpful because you can click on them There's only 8 stocks that come up on our screen, but you can see exactly what is being searched for within this screen here. As it states here, a number of these to look at. So price to earnings growth, that is the PEG ratio, comparing price to earnings to an expected growth rate. You've got the history of earnings per share, history growth, EPS growth. You've got a return on equity, okay, kind of an efficiency ratio, as well as an estimated growth, and a price to book, and that right there, the price to book ratio is really going to be your value read right there. But this is how they're saying, how does growth compare to value? And based on the criteria and the selections that are here, right? And it does state, like, for example, lowest 60% of the industry, highest 60% of the industry. You've got different ranges in here. So how is growth performing? How is value performing? What does that criteria net out for us here as we look at it? And then you've got it listed right down below. So, and when you do that, you get the categories as well. This is really just kind of a nice way to, hey, how do I determine, if I'm running a growth and value search, what are some of the specifics that I can screen for? Historical growth, projected growth, historical growth, projected growth, as well as, well, this is actually another value component as well. This is combining growth and value into one with the PEG ratio. Okay, so I actually wanted to tap into a few of these. And by the way, as we do this, notice this is a less than one. Interesting way to get started when you say, growth and value. So what a company is being valued for currently is trading for less than the projected growth rate. Really interesting. This is actually capturing quite a bit of information in one little ratio. So understanding the ratios is going to be very, very, important, and maybe even a first step to really being able to utilize the screener even better. Okay, that's going to be a key part of it because, knowing what it does is really, really helpful. Over here on return on equity, we're just comparing net income to the company's equity. How much, based on the company's equity, is the company return on that? So, how much net income are they bringing in relative to the equity in the firm itself? So there are some aspects that we can use, but you want to be knowledgeable. You want to know what each one of these is. By the way, anytime you wanted to change these or get into them, you can click on it right here, and you can change those characteristics right there, that criteria. Specifically, you can jump in here and just say, well, this is one selection I could make. I could also change over here on the criteria here and then click apply, and it would adjust that. If I said lowest 60%, what if I just said lowest, 40%? Well, we should get more stock or less stocks, right? Right there. Okay, so it can make an automatic adjustment to you, and now I've made some adjustments. So just a quick note, we have it on our main screen here. I'm just going to back up right here and click on it again. I'm just going to show you right from the beginning what that looks like. So we can create our own search, or we could just start creating our own search right now, just over here on the left-hand side without actually having to click on this. So what I'll do is I'll start off first with some of the basics. It's very, very important. Anytime you do a search, you've got to know what you're looking for specifically. Basic has that. For example, if I wanted to look at a specific index, the S&P 500 index is going to be different from a lot of small cap stocks out there. They're more established. They've been around. There are certain criteria that the companies had to meet to be an S&P 500 company. They probably have a lot more liquidity on scale, or just in general, to small cap stocks as well. We've got that as an index. We can look at an entire exchange. We can look at it based on market cap, sectors. Now, that's all going to be very, very important as it relates to growth, value, and income. What are we looking here for? What are we going to take from this? What's our specific driver here? Are we looking for growth? I want to kind of take a look at growth first here. Now, one quick note on that too. Growth stocks could be found in other areas, right? Like, for example, if I click on exchange here, we've got the NASDAQ, and the NASDAQ, if we select that NASDAQ just by clicking on it, a little over 3,400 stocks within that group. Okay, now some of these are going to be small cap stocks, and they can grow faster, all else equal. So there's just a lot of considerations when you're looking at growth stocks. quick note, if we wanted to look at NASDAQ, but we said we wanted to maybe find those that have been growing for a little bit longer, a little bit bigger type companies. Well, right up top here, market capitalization. If we're looking at a larger cap, let's say mid to large cap, it's reduced substantially, right? Just with what's in the NASDAQ itself. How much of the NASDAQ is small and micro cap? Well, the vast majority is micro cap in the NASDAQ itself. So very, very, very small companies. So it's incredibly important you're defining what you want to look at. Maybe you're going to find a little bit more stable, consistent growth on average when you're looking at maybe those that are a little bit bigger companies. That's not always going to be the case, but small cap stocks are certainly at a disadvantage when it comes to money within the business and being able to fund different projects, etc. A lot of times these small and micro cap stocks are constantly, I don't know if you've noticed this, but they're issuing more shares of stock to get them past expense, to get them to cover their expenses. And so I would call that a risk factor here. Okay. So that is one way to do it on an exchange. Now, just a quick way too is just to go ahead and select an index. And there's the S&P 500 right there. Okay, you got the mid cap. I think that's the S&P. Let's see, the 400. There's a mid cap in here. These are very large companies generally, right? And then the Russell would be the small cap over here. So you're getting an index that actually already has a big portion of the market cap built into it. I'm going to go ahead and just select the S&P 500 for now. It is the S&P 503 as it stands right now. I've seen it before. The S&P 498. So it does vary based upon what stocks are within that index, what they've held in there. Okay. All right. So with that, let's continue on down to company performance. And this is where we're going to find the majority of growth type indications here, like revenue, right? The revenue growth of a business. You've got down here estimated revenue growth. So you've got historical. You've got estimated. In other words, this is just a projection based on analysts, but analyst projections for the different time frames listed, which is great. You can have it, the current quarter, next quarter, the current year, or even the next fiscal year. Now, a lot of times when traders are using and investors are looking for estimated, they might want to find out what the current year is, but what are we in? We're in December right now. A lot of the companies are based on a calendar year. And so that really doesn't give us too much. It's kind of like saying the next quarter. So oftentimes what can be helpful, depending upon where you're at during the year, the next year could be really one of the main keys that we could be looking at in terms of, an estimated number, just because there's such, little time left in the year, the existing year. All right. So that is revenue. Let's do combinations of a few of these, and I'll show you how this could work just simply on a growth level first. But before I do that, a couple quick notes just to highlight first in terms of like categories. Next category, earnings per share growth history. There's your estimated right there. So estimated, you get the history. So what's already in the books? In other words, how have they been performing in the past? What does that growth rate look like over a 3 to 5 year time frame? You can go shorter as well. And then you've got the estimated growth, which again, we might be looking at the next fiscal year. That FY is fiscal year. And, what does that growth rate look like, when you're looking at the current year versus the next year? How do those estimates look? Lastly, there's a very long-term one, a 3 to 5 year. Sometimes these are very, very difficult to project on high growth stocks. Keep that in mind. A lot of times analysts can be overly optimistic, and you need to be very, very careful when you select those. Last little note there, are there any earnings surprises as of late? Could be an interesting one just to take a look at and see if they did or did not have an earnings surprise. Okay, now as we get up here, what I wanted to mention to you, and this is how and I've been reading over the years, how analysts would look at revenue, how they would look at, another term for revenue is sales, how they would look at earnings. A real basic look at like an income statement reads something like this. Revenue, which is also sales, right? So we'll just put revenue just so we know sales, okay? And then you subtract out your expenses from that, just as a quick note. And then you got your earnings. Now, we're dealing with publicly traded companies, so it's going to be earnings per share. But the amount of money coming into the business can be very interesting. You got revenues there, and you got EPS. So I'm just going to highlight that very, very quickly. That's about as in-depth as I'm going to go on fundamentals, but there's just a lot of things going on behind the scenes so that when you run one of these screens, you have a really good idea of what it's providing you. Now, quick note, revenue growth history, a lot of investors, traders, if they're looking for like a real growth type stock, they might choose a 3-year or a 5-year. And one of the key numbers or metrics they'll look for is like what oftentimes defines growth is greater than or equal to like 15% a year. Now that's like a growth stock, okay? They might also be expecting the same thing down below for earnings. But generally, it might be a little bit less of a requirement. So let's just say this, a 3-year growth. By the way, I'm hitting on specific values here on this. The 3-year growth rate would be maybe like 10, at least, minimum of 10. Okay. And let's just use one estimated figure here, but we're going to be estimating growth into next year. Maybe a big determining factor on the estimated growth EPS right here that individual might use here is how long are you looking to kind of trade or invest in this company? If you're looking to hold only within, let's just say, 6 months to a year to 1 year, okay, if that's our time frame, then maybe this makes the most sense. Where is it? Right here. The current year, current or next year, current year compared to next year. If you were looking at a little bit longer, I'm sorry, next year, I'm writing that wrong. I'm just looking at it. I had it actually selected right there. Yeah, the next year, right? But if it was longer term, more of an investor as opposed to a trader, I don't know. You could say that 3 to 6 months is still, it's kind of a middle ground between it being a trader and investor. You could still select a 3 to 5 year time frame as well. I mean, if it was longer term, right? I'm just going to go ahead and stick with, let's say, a 3 to 6 month up to a year's time frame. Maybe they're looking to hold a position. It might just be more relevant. Okay. Now, this estimated growth, we'd want it to be somewhere near at least the last 3, what the last 3 years is. And we can still go over here and we could do something like this. We could say, the estimated growth, we'll click on our number and we'll just say greater than or equal to, here's our example of 10. There we go. So now what we've done is we really refined just simply a growth type search. It's got the revenue, the sales expectations from the past. And really we're looking at sales converting into ultimately earnings, but it's had at least a 3-year run of earnings growth at 10%, and also that expectation in the future. The nice thing about this is when I click on view those matches right here, you've got all 44 of those, but it does give you these numbers in here as well, right? In other words, it gives you the actual read, what those numbers were, and they can be highlighted. For example, if we wanted to say, well, what has the highest estimated growth? All else equal, based on what the historical numbers have been, what are analysts projecting as the highest growth? And I click on that once, it shows the lowest growth, and then there's the highest growth. Now that one is really quite high, but that could be something that could be looked at. For example, I mean, maybe that could, let's see, VRTX. Okay, so looking at VRTX, you could look at the VRTX stock and see what's going on there. Obviously, it's met some growth rates thus far, where it's at right now. And then there is your revenue growth rate. Now, you'll notice one important thing that you're not actually getting from the screener here. And what that is what's happened over the last 3 years. So we know that we got an average in here, but what does that look like? What does that trend of growth look like? Is it going up? Is it really choppy? Did you have 1 year here where it was a negative number? and then the rest of them were positive numbers. What really accounts for this? What's the trend analysis of those earnings? And to do that, we do need to go to one other portion of the site here under schwab.com. And I'm just going to do that right now. We'll take a look at this. And I'm just going to go ahead and click on research again, research tools. And in this case, what was that second one that we had? Let's see. I was going to choose we can look at Vertex, VRTX. That's fine. So VRTX, we'll go ahead and right under research tools, we're just going to type it in. VRTX. We're going to break this down and see exactly what those numbers were coming in at. We can look at revenue. We can look at earnings. I'm simply just going to scroll down now. You got news in here. Doesn't pay a dividend. Here are your expected earnings. Keep on scrolling. And here you go. Oh, let's see. Earnings, that's fine. We can see what those earnings were in the books. Historical earnings right here. Sorry, I moved over it a little bit. Okay, so what did we have? Well, you see the actual earnings on this company. Okay, so actual in blue. I mean, it was for the last 4 quarters. I mean, it was somewhat stable. And then all of a sudden, bam, what's this all about? What did the stock do when they missed by, $15.77, as it states? Which sometimes you'll see that with these pharmaceuticals or biotech stocks. Click on this show more right here. And let's click on that right there. Okay. So if you take a look at that, you can really see what's going on here, and you can kind of get a general sense of the earnings per share. Now, key point is you're coming in here and looking at this earnings per share. Notice we're in a non-GAAP right now. The non-GAAP actually shows that the estimated numbers for this year dropped a lot for 2024. Now, what we put in on our screener was out here because we're still in 2024. And so it's showing an estimate at the end of the year. We actually pulled 2025 numbers next year, and it goes like this, probably. I mean, in terms of an expectation. Now, will that be actual earnings per share? That's the big question. But they're just looking at maybe a recovery here. Okay? Because we did have that one major miss, it appeared, right, that it showed us. So that could be a huge gain, obviously, if we hit those numbers. And that's probably what's accounting for this earnings per share growth, is that there's a bounce back. There might have been a one-time item or whatever the case might have been to pull us down there. Let's choose a different company in this case. Let's do this. Let's take a look at Freeport-McMoRan. Okay, this is a gold. It's about a 90% gold, a 90% copper company, 10% gold. And we'll take a look at FCX right now. I'll pull it up, FCX. Click on that. And here we go. Let's see, let's pull it down a little bit. And you can see over here, we're in the same spot, but what really accounted for this? Now, it had come down for a little while, but the estimate seems to be almost on par we have with earnings going forward. Okay, there is, the revenue is expected to increase by the end of this year, but we actually had the 2025 numbers in there as well. You can see, though, that it had been dipping, and I think the price of copper had been dipping along with this, kind of pulling this down, but it's just, I mean, I'm giving you kind of that information now. Copper was actually going down, and obviously, if your company's 90%, copper mining, that's going to happen. But you see kind of like what kind of a business you could be looking at. This is a little bit more volatile, right? As you're looking at it over a year-to-year basis, there's some ups and downs. But I just want to, kind of highlight that this is an additional point that we could be focusing in on here as we kind of dissect this data a little bit better and just tracking that actual history here. The last 3 years, what did that look like over here, right? For example, was it trending up, trending down? So there's a little bit more to it, but I mean, it's not that bad. You have it right at your fingertips as well. Okay, so here are a list of growth stocks. Now, as I show this here, oh, and by the way, yeah, great to have you guys all joining us. Thank you, Kevin. Awesome, got a lot of info there. Perfect. Dragon Rider and others, welcome. The thing is over here, when we go through this, I mean, this is giving us a really solid feel, at least on the criteria that we've got here in terms of fundamentals. the fundamentals, FUND for short. But that's just a component of it, right? I mean, we see these growth rates, but is the price of the stock also doing what the fundamentals suggest as well? So the price of the stock or the technicals, are they in line together? Because this is truly a growth stock. I mean, kind of a search. What would we be looking at there? Simply this. Uh, we'll use fundamentals in black and we'll use um, price in blue, but fundamentals, are they trending up? This search right here indicates over the last 3 years, this is kind of what if we could look, generally speaking, we might be seeing a trend on some of these. Now, we showed how you can look into more detail and make sure quarter or year to year to year what that looks like. But are they trending up? This search tries to show us that. It tries to give us that information that the fundamentals are positive. Now, in terms of prices, do we have a trend on the underlying stock itself? Because ultimately what we're trying to do is combine in here fundamentals with technicals. You want to see the follow through on the price action, but maybe there's something more behind the scenes than just big expectations. Maybe the company has been able to deliver results in the past, which these first two columns suggest, and they're also expected to project it into the future. And that's kind of a growth type search using this criteria over here on the left-hand side. Okay, any questions on that? Okay, I'll wait to see if there are any coming in so I can potentially just explain it visually here for you. But this is some really interesting criteria. Now, we can add to this search too, because we did have 44. What I want to do is kind of narrow this down right now, choosing just a really straight growth type criteria, 15%, 10 and 10. But what if we just said, well, what about, for example, under valuation? We could come over here. We could look at that PEG ratio and see if there's anything really undervalued here. We could also look at like a standard ratio, like a PE ratio, and just see what the numbers are. Now, what I'm going to do here, I'm going to keep the 44 in place. If I do not select an additional criteria here, which is really nice, it's just going to give me those numbers in a column and make it very, very easy for me to categorize them, right? So let's do this. If I click apply here, now I've got my price to earnings. Now, here is a big, big warning sign. If they don't have a positive price to earnings, which I think we're getting over here, well, it's like this, folks. You got prices up top, but if your earnings are like negative, then it's kind of an undefined ratio, right? Notice you're just not getting anything. That's kind of a red flag there. I mean, these could have been these companies could have been, in kind of a tight situation. But this is kind of our value screen. So we've talked about growth already. We've got growth. Check, check, check. And here is value. Okay. Some of these are a little bit high on our list, like 168. Okay, so what's that? This energy company. If we really wanted a key value component, what some traders will say is that, and I've kind of seen this a little bit myself over the years. It's not a guarantee that this will happen, but if your PE ratio, sometimes even fast-growing stocks, sometimes they will bottom right around 20 to 30, depending upon the growth rates. Now, that's not always going to be the case. I'm just throwing out a general benchmark that I've read about and I've seen. No specific books, but just a lot of the time I've been in the markets, I've seen this as well, 20 to 30. So why don't we just say, because it's a growth type stock, we could still include, anything from, let's just say 5 to 30. I think 5, what was the lowest one? We can get everything here. But we could say we could even just say less than 30. I'll show you how to do that. So I'm going to go back into my screen up top, as it says none selected. I'm going to click on this now, and now I can readjust this to what I want. So let's do that right now. Let's go less than or equal to 30. We flipped it around, right? Because normally with growth type stocks, you're looking for the PE, like growth. You want it to be as high as possible. In this case, we flipped it around and we said less than. Because when it's on value, generally speaking, the lower the ratio, the better. That's all else equal, of course. Let's click apply. Wow, that was a pretty big cut. In fact, it's funny, it cut it like, we have 44, right? It cut it right in half just by using that 10 to 20, well, not 10 to 20, but less than 30. So technically, I mean, any of these could be of interest if it was combined with growth and value and somebody was fine, maybe looking at a 30 PE ratio. Okay. So what do we have here? In fact, we've got, let's see, do we still have this? We do. Okay, so it's still organized. You can see, because I clicked on this one time, by estimated earnings growth next year. Still organized based on that going forward. But now you can kind of take a look over here and say, well, that's the estimated next year growth. That's your PE ratio. And do you notice something kind of interesting here? The PE ratio, let you guys in on this so you can kind of see it. Notice when the PE ratio, the multiplier, what we're paying relative in price compared to the earnings of the company, it's about 15 times. But that earnings per share, if we thought this was valid, this seems to be a company that has delivered similar numbers. I mean, it's the higher digits, 50s and 60s. This is 70. That's a key that maybe it might be. Yeah, I mean, they've shown in the past they've been able to deliver these results. But that seems to be outweighing the PE ratio right here. Now, if we were just looking at the S&P 500 and doing our own investigation on it, that would be tricky to do. I think that would be hard to go through 500 companies and to maybe find something like this. Screener brought it down to 22, and we're already seeing some interesting kind of details here. Okay, emerging. Okay, here's the next one down. Actually, let's look at just a different company altogether. How about this Darden restaurant? They own a bunch of restaurant chains, totally different, right? And we got Google right below it. Let's do these two right here. Okay, so as we look at that, we can come over here and say estimated growth rate, just about 12%, but the earnings, price to earnings, are a little bit higher. So notice the growth rate is less than the PE ratio. So there might not be as much of a growth to kind of value play. We're actually, it might be a little bit slower mover, which I would kind of anticipate too. Now, Alphabet or Google, it actually falls into the same category. The estimated growth rate, it's a big company, less than the PE ratio, okay, in terms of estimated growth out next year. It might be getting close to a valuation that's actually kind of a little bit possibly higher, right? Up top, this suggests that there might be more room to grow that PE ratio. In other words, maybe the PE ratio, I mean, maybe prices go up more to get that PE ratio up into a higher category. Maybe it is 25 or 30. Okay? See how those can work together? The estimated growth is greater than, in this case, the PE ratio. That's really the breakdown of the PEG ratio. And that's one reason why I've got this highlighted up top to kind of show you this. And you can just go through and just, just kind of visually look at these and say, okay, yeah, greater than, greater than, greater than, and that could mean, and that's right here, less than. But we're just getting a general idea. Does it have components of growth and value? We don't really have a screen to do this any other way, but it's really nice that you can put the columns right next together and just take a look at that. I mean, that could be a first area if you're looking at, growth at a reasonable price. All right. Okay, any questions on that? Oh, TTM means trailing 12 months. TTM, and you're seeing that right there. Good question. TTM. So in other words, it's looking at the PE ratio, averaging what? The last year's worth of it. It's not just looking at the last quarter of earnings. It's looking at the full year of earnings, trailing 12 months. All right. I get nervous when there aren't any questions about this, but yeah. So there you go. All right. let's add our additional component. We said, hey, we talked about growth, which we did have growth here. We've got growth. Let's just circle it. This is growth right there. This is kind of a general search, but this is a very, very common valuation metric or ratio, and that is the PE ratio. So you got growth, you got value, but what about income? Are any of these that meet at least this criteria also have kind of the trifecta? They also pay dividends too. Well, that could be looked at right over here. Now, again, remember with dividend-paying stocks, the dividend's not guaranteed. Of course, companies can cut the dividend at any time, but hey, do they have a dividend at least that we can look at right now? Well, let's do this. It's a simple click. Go to the broad category over here, and then we'll choose this, annual dividend yield right there. What is that yield going to be? I'm just going to do this. I'm just going to say that they have a dividend yield. Now, I think a lot of people don't really care about the dividend. When they look at growth and value, they might just be looking at the potential for the stock price to appreciate, capital gains. But if they're looking for income through the dividend, through a dividend, this is just one approach. And watch this. I'm going to take these 22 now. So this is going to have to meet all criteria. We're just going to say that it has to have at least, gosh, how about this? They just have a dividend that shows up, 0.01. Is that too low? How about 1%? Ooh, starting to really cut it down. Okay, they've got a dividend of at least 1%. How about that? There you go. Now we've narrowed it down to 13. Shaved off about what? Nine more companies in here. You're going to notice that some of the categories in here too are a little bit different as you come down and look at these. I mean, so what are we getting? Energy, not sure about this, but plenty of financials. In fact, Darden's in there. This company is kind of a holding company for a number of different restaurants. I know they used to have Red Lobster and like Olive Garden at one point in time, I believe, but just as an example. And then you've got some others in here too. I believe that's like a house, home builder perhaps, but mostly banks and financial services in general, a couple energy companies. Okay. So that's what you're getting. And so searches like this can drive those kind of numbers. But look at this. This is in the 3% range. This is not too shabby in terms of the dividend. Now, this could be, though, like we said, the trifecta, but really kind of straightforward and easy to do. I'm going to go ahead and save this screen, and this will be the growth, value, and income. Now, before I do that, question coming in here, Michael, can you please share a way to gather undervalued stocks and additional filters to refine? So just strictly undervalued? Sure. Do you want to have a component there, Marcelo, in terms of growth, like a PEG ratio, for example? It's a way to have growth in there as well. Oh, you've covered PEG before in one of your previous classes. Yes, I did, Long Snapper. You got it. Good memory. That's right. We talked about that in the generating income in your portfolio, I believe, for the growth and value stocks. At one point, we looked at it. Yes. So let's do this. I'm going to save this, though. But what would be the last thing we'd want to look at? What is the stock doing? I've got to change that yellow. That's kind of hard to see. I'm used to the black screen in the background with the Thinkorswim platform, but here you go. That is the stock. What is the stock doing? Trending up as well? Could be a key point. Okay, I've moved off the yellow, folks. It's not even good on my eyes. And I don't even know if Kevin can see that as well. But let's go ahead and do this. I'm going to save this screen right here. And we're just going to call it growth, value, and income. But the key thing here is I'm going to just make a keynote because this is very, very important too. What was the basket? What was the universe of stocks, as the screener says it, that we were searching out? It was going to be S&P 500. Very, very important point. Now we have a really good idea. Okay, these larger cap stocks. Maybe, the growth rates, I mean, we didn't break 100 on these, right? In terms of the estimated growth rate, maybe the historical growth rates didn't break 100. So not incredibly growing fast, but just maybe the fastest growing group within the S&P 500 historically that we're seeing based on our criteria. Boom, we saved it. And now I've got it right there in my saved search. Now, I wanted to hit that last point, that last question. And, can we expand out, Marcelo? It says like the value side. Yeah, for example, let's do it. In fact, I'm just going to go ahead and just start over real quick. And we can do that by, look at this. I mean, I can, and it depends on, remember, what you want to search it. I'm going to go ahead and just keep it the S&P 500. We'll click off a few of these, and there you go. So where might we start? There's our 500. We would go right into valuation here, and we can look at a few different details. Now, remember the PEG ratio, that covers, this is really a quick search too. What on the S&P 500 has the price to earnings ratio that is less than the estimated growth rate going out 3 to 5 years, because that's how Schwab does their PEG ratio. They don't use it the next year out. It's that 3 to 5 year expected growth. Watch this. Click right there. There are, wow. Okay, so there are actually 30 companies that meet that criteria. And here they are. So again, this is what people are paying for the PE ratio. In terms of the price to earnings of the company, I should say paying for the earnings of the company with a PE ratio, is less than the estimated, I'll put E there, growth rate, and that growth rate is the 3 to 5 year estimated growth rate, which is higher. So that ratio, if it is less than 1, that is what you're getting here. And by the way, do you guys see the value in that right there? What the earnings are being valued at is less than the estimated growth rate itself. So that could be an equation of value when you're getting less than 1. There are 30 companies that have that criteria. So that's kind of like the big kind of takeaway there on that. Lastly, let me just add one thing, a couple things to it. You can use other criteria over here, Marcelo and everybody, right over here. Like, for example, price to cash flow, price to sales. So price relative to the earnings of the company, right? Price relative to a lot. Notice they're all price. And so it's just price relative to this and whatever that might be, whatever criteria. You know, at the top it's earnings, but it could really be anything we looked at here. And the lower, the better is generally, you know, all else equal is what you look for in this section. Totally different when you're talking about company performance. This is right? Earnings, revenue. This is the higher, the better. So they look for higher numbers here, lower numbers in the valuation, because you're comparing it to price and you just want to pay less for something based upon the price of the stock. Okay. So I will let you play with that a little bit and see what else you can do. Okay. Awesome. Hopefully that's helpful. We don't have a huge selection here under value, but these are all very well-known ones. You got cash flow, sales, and earnings. All right. So a quick note, while we're in Schwab right now, you know, you can go into Schwab coaching. And I just wanted to highlight this for everybody. So within Schwab coaching, what you can see is this. I'll just pull it up right here. So just schwab.com coaching. Folks, we have been adding, there are going to be a few different classes we're going to be adding. And those classes, you'll be able to find them right under schwab.com coaching. Just go to our live webcast. I think many of you already know where this is at. I'll send this link to the chat so you have it. There you go. And you can come down here and take a look at many of these upcoming. Now, if you want to see what's upcoming in January, click on that January right there, and it will be right there. But by the way, if there's, you got to click below here to capture more events, for example. But, if we go through here enough, I guarantee you we're going to find Kevin. Oh, he'll always be at the top. Yeah, he says great stuff from Kevin. This is going to continue. Trader Talk in today's market. Take a look at this. I'm actually doing a swing trading one on Tuesday. That's new. Really looking forward to that. But with that, folks, we still have over 30 live webcasts per week. And so definitely take advantage of this. Bottom right hand corner of the screen, if you haven't done so already, smash that subscribe button. If you like today's presentation, hit the like button as well. We'd really appreciate it, folks. Good to be with you. And thank you, Kevin, as always, for your help in the chat. And all right, everybody, have a great rest of the day.